Hi there, welcome to Kneppy Invest and welcome to another answer and reply video. It is 19th of July 2025. Time is currently 12:59 p.m. So I'm recording this video a little bit later than I usually want to. Reasons behind that. This morning I did a park run. It's called Henry Kendall Reserve Park Run at Liontown on the mid-north coast of New South Wales, sort of in between Port Macquarie and Taree, closer to Port Macquarie. And there's a pretty big mountain just near this park run called North Brother. And I wanted to climb North Brother, and I did that twice. So first time I went up, I got to the top and went, is that it? So I went back down and then climbed it up again. And the main reason I wanted to do this sort of thing is to really test my body because of this hiking trip I'm doing. And I'm satisfied. I am satisfied. And tomorrow I'm going to do a long run, hopefully 23 or 24 kilometers, just to see how my body can heal itself or adjust or whatever. Anyway, so that's my more. Oh, by the way, and when I did get back home, there were a few visitors. We're talking about aunties and uncles, two aunties and uncles, a cousin, cousin's two children. Also, she's actually living now in Sweden. Married a Swedish guy, and they'd have two children. So they're visiting for 6 weeks. So that is the reason why I'm recording this video about 3 hours later than I usually want to. Anyway, let's get stuck into it. I do apologize if I've missed any of your questions or comments. I do get a fair few, and there were quite a few of really good comments that I will not discuss in today's video. Anyway, so let's start off with Paul LY, who asks, hi Kneppy, can you share your thoughts on or with Liontown Resources? And the main reason I decided to talk about this particular stock or company is because I bought a trading position, or I took a trading position in Liontown Resources. Now, lithium, pretty sure Jen Reinhardt has a pretty big stake in this company. Share price up 10.12% on Friday, so fairly happy with that. Nice little rally just after I bought. And the main reason I bought is because of the chart. Other than that, lithium, I'm pretty sure they're in production. I'm pretty sure, but I could be completely mistaken. So that is the really interesting thing about technical analysis. Sometimes you don't have to know much about a company. Just the chart tells you all. And I'm doing that with a few lithium companies right now. Some of these lithium companies' charts are looking really interesting. And maybe the bottom has been reached. Just maybe. Maybe. That's what I'm going to say. Maybe. Now, when you don't really know what a company does, you can look at any presentation. Or for Liontown Resources, I'm not sure if they're in production just yet. All you have to do is go back to the most recent quarterly. So on the 24th of April, March 25, quarterly activities and cash flow report. And we will see Liontown release the June quarterly report in the next week or two by the end of this month. So this is what sometimes I do. Now, because I'm only taking a trading position in this company, I don't really have to do this. I just wanted to see if they're in production. And revenue up 17% to 104 million. So this company is in production. Now that means Liontown is less a storage stock than anything else. But I'd also say that Liontown, because they're a mining company, is not high quality because they're a price taker. And in my opinion, high quality companies are not and cannot be price takers. Okay, so let's see why I took a position in Liontown. Liontown Resources, LTR. This might be the second time I've traded Liontown. Yeah, so I've been following this company for a long time. You can see the share price popped up significantly back in March 2023. I'm pretty sure that's because of Jen Reinhardt taking a position, or maybe there was a takeover bid. I can't quite remember. And the share price has fallen a fair bit since then. But if we just focus on this daily chart, you can just see there looks like there is a bit of a shift in trend, doesn't there? Definitely seems like there is a shift in trend. And I was waiting to see the share price just get above this dash line here. There was a bit of resistance, and the share price, you can see, before yesterday on Friday, the share price was just sort of straddling that particular breakout line. And I thought with it straddling, sort of going up and below, oscillating up above and below that particular resistance area, I thought I think it's going to go higher. So I took a position in Liontown Resources. So in fact, I'm a little bit more bullish about this chart just now. Of course, if something bad happens with lithium, if something really negative happens with lithium, maybe someone develops a battery that doesn't need lithium, you might see this chart turn around significantly. So sentiment could shift like that. So that's another reason why I'm more likely to trade these companies. But I do like the chart for Liontown Resources. It's a nice looking chart. Now, if I have a look at the weekly chart, probably don't get the same sort of signal. Not as happy with this chart. So mostly this is just based off this nice little daily chart. So I like it. Another thing I always look at is volume. So I would like to see a little bit higher volume. But what got me a little bit, what's okay is we did see some elevated volume back in May. So that's actually a good thing. But I'd like to see or prefer to see a little bit more volume coming in for Liontown Resources. But the share price action looks pretty good. Okay, let's have a look at the next question. So thank you for that, Paulie. We'll call you Paulie. Next question is from Stonka Tonka. Maybe the best name ever on this channel anyway, Stonka Tonka. Hey, could you take a look at Pointerra chart? Interesting setup heading into the quarterly. I forgot about this. So I am a Pointerra shareholder, and their last quarterly was a disappointment. And I was thinking there's a good chance the next quarterly, so the June quarter, might surprise to the upside. And I was thinking maybe I should add to my trading position. Well, to be fair, my position in Pointerra isn't a trading position. This is probably the most storage stock I do own. Well, maybe not. I still refer to Pointerra, even though they are selling something, they do generate revenue, receipts. I still refer to them mostly as a storage stock simply because they have to prove they can generate cash flow and be profitable in the long term. But I do think there's a chance because the market overreacted in the last quarter that if they do release a good quarter, you might see the share price rally a fair bit. And I have not looked at this chart for a while. So let's have a look at Pointerra. Pointerra chart. Just take your time, trading view. There we go. Not as bullish on this chart as compared to Liontown. In fact, you can see when the company released their quarterly in January, really nice reaction because it was a pretty good quarter. And then when they released their quarterly in March or April, share price dropped 27.7% because the market was disappointed in it. Notice a volume difference, however. With this big drop in April, much lower volume than what we saw back in January. So I do think a better chance that we'll see a January type reaction to Pointerra's quarterly than what we saw in April. I do like how the share price is starting to move up. So I do think maybe the low has been reached, particularly if the quarterly numbers are good. That was the time to get in. Or maybe not, or add to your position. Anyway, so I don't mind this chart, but not as good as, say, Liontown. And the main reason behind that is there is still a fair bit of resistance. And that resistance is all those shareholders who bought between January or bought between those two quarter releases. So between January and April. There would have been a lot of shareholders who bought between 7 and 10.5 cents. They are resistance. The best way to get rid of those, release absolutely stellar quarterly results. Thank you for that one. Interesting setup heading into the quarter. Yeah, I do think it could rally from here if they release a really good quarter. Big if. Well, maybe it's not a big if. KM says, in your opinion, is the technology chart showing signs of a good top-up opportunity given that it's been cooling off lately? I do consider Technology One to be one of the 5 highest quality companies on the ASX. There you go. In fact, I did a video on this. What are the 5 highest quality stocks on or companies on the ASX? And my initial thoughts were Technology One near the top of that list. Pro Medicus, Technology One, CSL, WiseTech, REA Group. Those are the 5 companies that came to mind. And then I did a screener and I'll release that video in September. In fact, I think it's I have it being released towards the start of September. So look out for that. Anyway, I once owned Technology One for a period of time, maybe 8 years ago, and then I sold for some reason. I don't understand why. And that's the way I've changed now. I am a Technology One shareholder. I have no intentions of selling out. I do think Technology One might be a little bit overvalued, but I'm okay with that because if Technology One remains a high quality company over the next 5 to 10 years, more than likely share price will rise from here. Now, in the meantime, it might drop a fair bit, but then rise. But I think if you compare the share price now to say 5 years or 10 years, the share price in 5 or 10 years will be higher than it is now. So I don't think if you buy, more than likely, if you buy Technology One, you're going to be fairly happy in 5 to 10 years. Maybe not in the next 1 year, but in 5 to 10 years, you'll probably be happy. So let's have a look at the chart. And by the way, because I do consider Technology One to be a high quality company, I actually don't look at the chart all that often. So I don't really use technical analysis when it comes to my long-term holds because I'm owning for the long term. I have no intentions of selling. Now, one thing I do look at is valuation of these companies. And yeah, now this is the chart for Technology One. It's an absolutely brilliant chart. If you have a look at the weekly chart, by the way, this is the telltale sign of a high-quality company. Look at this chart. A beautiful chart. Study this chart and you'll see the chart of a high-quality company. On occasion, share price will drop to the 200-week moving average. That's the red line. And that only happens on occasion. Last time it happened was in 2018. There you go. In fact, between 2016 and 2018, share price went sideways. And I think I might have sold during that period. But that's the only time since 2010 when the share price has dropped below the 200-week moving average. Absolutely brilliant time to buy. Now, the share price now is well above the 200-week moving average. And I think you could say that means the company might be slightly overvalued. But I also believe that the company is starting to accelerate their financials or their revenue, also their profit. And I think that's what the market is seeing. So there's me buying back in at 1627 at a much higher price than when I previously sold out, by the way. And the main reason I bought back in late 2023 was simply I do want to own shares in this company. That's it. I do want to own shares in this company. And it's just been fortunate that the share price has more than doubled since then. I wasn't counting on it. Even then, I thought it was expensive. But anyway, so share price could pull back a significant amount. So for instance, share price could pull back all the way to $20. And so share price could halve from here. It could happen. It could happen. Let's just go back to the daily chart. I do or don't mind what's been happening over the past 3 weeks or even a month. Yeah, more than a month. Share price has been going sideways. That's good. It's been pausing. Share price rose a significant amount from the lows in April. Share price almost doubled. And it's really good to see when the share price rallies like that to just have a bit of a breather. Share price goes sideways. So we haven't really seen the share price drop. But yeah, this is a great chart. Have a look at the weekly chart, daily chart, a brilliant chart to look at. And definitely a company, if you don't own it, to put on your watch list for a potential long-term buy, long-term hold. But that's up to you. It's up to you. We all have different ways to discern whether a company might be high quality or not. The way I view stocks is going to be different than you. And the way I look or to determine whether a company might be high quality or not is have a look at growth, revenue growth, return on equity, return on invested capital, and also margins. And Technology One, when you do that, is among the best on the ASX. So thank you for that, KM. Top up opportunity, by the way. I think, yeah. I mean, for me, I'm not topping up at these levels. I would top up. The way I'm going to do this, and this is a bit of a shift in my strategy, what I would do is I would top up if I see a share price drop towards a 200-week moving average. Now, the problem is it's only done that once in 15 years. So you could be waiting another 7 or 8 years. But that's me holding a position in this company, and then I'll add to my position if that happens. But if you want to get an entry into Technology One, and if you wanted to wait for the share price to drop the 200-week moving average, you might be waiting a long time, and the share price before then could rise significantly from here. So the way I look at this is there really good value in Technology One at these prices? Probably not. And I haven't even looked at valuation, by the way. So let's do that now. So how would I discern whether there's good value in Technology One right now? Now, I could just have a look at that weekly chart and you could just say, well, share price is well above the 200-week moving average, which is suggesting it might be a little bit overvalued. P ratio is about 100, which is, I think, higher than usual for this company. Now, one of the reasons behind that, I think, is the market is expecting some pretty good growth over the next few years for Technology One. And I think there is some legitimacy to that sort of thinking. Now, what I'm going to do is just have a look at the P/E ratio of this company. Now, for some reason, Physical AI doesn't like what I'm trying to do here. There it goes. Just took a while. So if you just have a look at the P/E ratio, very blunt way to look at it. Now, there was a big spike in P/E ratio back in 2018-19. I think it was just a one-off in earnings. And the way to confirm that is you just go to earnings or income. And if we see, we can see that in 2018, there was a 50% drop in profit. So there's one-off. That's why you see a spike in P/E ratio. That can be the problem with just focusing on earnings or focusing on P/E ratio. Sometimes you just go one-off in earnings that could distort the P/E ratio. But, I cut out the wrong one there. So if you go back to the P/E ratio of this company and just ignore that 2018-19 period, the P/E ratio of Technology One is significantly higher than what you would have expected or what you would have seen in the past 10 years. So typically it hovers between 30 and 60. Now it's 100. Okay, let's move on to Chris with 2 S's says, "Hi Nep, you should make a pre-recorded video that you add onto every video you upload for financial advice disclaimer. Would save you saying it after every video you make." I have thought about doing that. But to be honest with you, what I say at the end of the video takes me 5 seconds to say. And it's so habitual that I just say it without even thinking, but sometimes then I make a mistake. But yeah, so that could be something I do. So thank you for your suggestions. I'm always looking for suggestions to improve the channel or whatnot. So thank you for that, Chris. I'm always thankful. Whether I do it or not remains to be seen. John Doe says, "Just looked up largest tariffs in the world." Oh, he's mentioning Smoot-Hawley. Smoot-Hawley Tariff Act 1930 on 20,000 goods led to decrease in world trade and deepened the recession. Fordney and Macumber Tariff 1922 was cited as one of the causes of the Great Depression. I would not call myself a student of the Great Depression. I've always thought of the Smoot-Hawley Tariff Act as not the cause of the Depression, but it made it worse. It made it significantly worse. And if you do some research on Smoot-Hawley and the expectations of what was going to happen, well, that didn't happen at all. What they thought was going to happen didn't happen. So they did not expect any retaliation. Yeah, everyone had retaliated. So that was one of the interesting things. We don't expect any retaliations, and every country retaliated. So Smoot-Hawley, 2 senators, I think, they got turfed out at the next election. What's his name? Who was a president? Was it Herbert Hoover? Herbert Hoover. President in 1930. It was Herbert Hoover. There you go. 1929 to 1933. There you go. Hoover Dam. One of the things I do remember reading up on this is when they were talking about bringing Smoot-Hawley Tariff Act in, 100 economists went to Herbert Hoover saying this will be really bad, don't do it, and Hoover just ignored them. And at the next election, I'm pretty sure it was Roosevelt, not Teddy, the other one. What's the other one? Who's the other Roosevelt? Dwight? President after Hoover. I'm pretty sure it was Dwight. Yeah, Dwight Eisenhower. It's interesting that I used to be able to name every single president. I'd probably still be able to do it. Not in order. But yeah, so it was Franklin Roosevelt, who was in power for 12 years. He had 3 terms. Let's hope that doesn't happen now. Funny enough, there was Franklin D. That's right, but Dwight. Anyway, I'm going to actually, the reason I've actually talked about this is I want to look up Fordney-Macumber tariff. And it's really interesting that over the last 100 years, we've seen the rate of tariffs go down and down and down. And it's one of the reasons why we've seen some pretty good growth over the last 100 years is because they've decreased tariffs. So it's really interesting to see one country in particular starting to pivot in the other way. And I don't think it's going to turn out well. It's not going to turn out well for that country and other countries as well. So thank you for that, John Doe, because you've given me something to research. Forney Macumber. I should write this down because I'm going to forget if I don't. And I don't have a pen. Yes, I do. Sorry, I lied. McCordney. Nope, I got that wrong. Fordney Macumber. Sometimes I have to write stuff down. 1922 tariffs to remember to do stuff on it. Big boy baby. Based on experience, how powerful is the effective brokerage reports on the short to medium term? I would say on the day they can be fairly powerful, but in the medium term, I'm going to say very little power. I'm going to say in the medium term, very little power. So very powerful in the very short term, one day, but that power dies away really quickly. Now, in saying that, I am keeping an eye on. Was it NIB? I thought it was NIB. NIB, which means it's NHF. Now, if we have a look at this daily chart, because I am trading this, and I was thinking, oh, it could be heading towards a sell. And then there was a positive broker report released on the 30th of June. Share price on that day rose 9.4%. And the share price went above a nice little resistance level. And the share price has rallied it since then. So keep an eye on this one, because I've always thought that brokerage reports were quite powerful in the very short term, one day, but in the medium term, there's no relationship. And I think one of the reasons I think that is because I remember so many instances in the past where we do get like a recommendation or something, share price pops up, and then the share price just collapses after that. And there was a company called Damstra. It's no longer on the ASX. It got bought out. I think it was Damstra. There's a Motley Fool recommending thing called Motley Fool. Is it Hidden Gems? Something. I forget which one it is. And they recommended Damstra. Share price went up something like 20% in one day. Share price went up to like $3. I forget exactly how much. And that was the high. The share price then went from $3 down to 10 cents. That was one of the things I do remember about. It wasn't a broker, but it was just a recommending site. And the reason I remembered that is because I had seen in the past when the share price of companies, these smaller companies, had popped up. And I was like, what's happening here? And then it was pointed out to me that Motley Fool, Hidden Gems or something, had recommended this company. And what they do is they recommend a company, and then all subscribers then pile into that company, send the share price up, and then some of the recommendations just were awful. Anyway, so I pay no attention to broker reports or anything, but I do think there will be a response in the short term. But in the medium and long term, I think not so much. And the other thing I think about NIB Holdings is just the technical signal as well. Share price did get to a long-term high or medium-term high, and I think that was sort of a breakout. So a breakout. The other thing is look at the volume, very weak volume. So it's even though share price is rallying, it's a fairly weak rally. I do prefer these sort of breakouts on positive financial news. But and by the way, this is just an opinion, and I doubt there's been any research on this. This could be a really good research topic. I could be completely wrong. And I think it's very important to maintain an open mind. Just because you think a certain way doesn't mean you should continue thinking that way. Show me some evidence that I'm wrong on this. And if you show me evidence, I will change my mind, which I think is unusual in today's society. Trader Hooper. Can't remember if I've asked you this or not. So apologies if it's a repeat. And the reason I'm reading this is because you might have asked this and I've forgotten. And you're making me remember. Well, not remember, but to maybe acquiesce to your request. Can you consider adding the Australia New Zealand to the currency list? It might be useful to keep an eye on this for stocks with a primary listing in New Zealand if most of the earnings are in New Zealand. I know some have primary earnings in USD, but others might be more locally focused. So should I add Australia New Zealand to the currency list? I've only got one, and I'll be honest with you, the reason I have Australia US is for selfish reasons. That's it. But I could add this. So I'll go to my technical and AUD, NZD. I think we want, well, which one would it be? There's so many here. Like where's my Aussie dollar? That's FXCM. FXCM. It's probably simmer. Should I add this? Should I? Let's do it. I'll add it and then, yeah, why not? I'll just add it. Why not? There you go, Trader Hooper. I've added it. Whether I look at it all the time remains to be seen. Stu Percy says or asks, who is looking after your dogs when you are away in the States? I know I have dogs and it's a difficult decision sometimes. First time I went away, the breeders looked after Milo for a month. And how can I say this nicely? Wonderful people, wonderful breeders. The night we're flying out, we went to Europe, and we're at, I think, where were we? We were in the airport waiting for the flight. We got upgraded to business, and the breeders sent us a photo of Milo begging, which we taught him to do, but he was begging to get treats. And when we came back 1 month later, he was a little bit overweight. Let me put it that way. He was a little bit overweight. The vet wasn't happy, so they treated him very well. The last time I went overseas, we had house sitters and dog sitters, so people we knew. So my ex-partner's parents came over. They split up. So mum came over, my parents came over, her parents came over, and then my sister came over. So we had 4 groups of people who stayed about 2 weeks each, something like that. And they looked after the dog, only Milo. This is the first time I've gone away, gone away with Nala, but ex. So I've split up with my ex-partner, I suppose. That was 5 years ago, by the way. And she actually has the dogs now. So she's looking at the dogs. I went up to Brisbane or Gold Coast on Monday. One of the reasons I did that was to see the dogs. They're going to come down to see and visit us just before I leave for about 5 days or so. So I'll get to see the dogs for 5 days. And then when I move back up to Brisbane, we'll have the dogs half each, that sort of thing. Anyway, so very easy. She's now looking at the dogs. So I don't have to worry about the dogs. But in saying that, I still worry. Sensei says, thoughts on AZY Antipa Minerals. Okay, so I don't know anything about Antipa Minerals. Is it, let's try to guess. Is it antimony, just because it's got ANTI? Is it antimony? Or is it, I have no idea. So let's have a quick look at what this company does. Oh, gold, copper. So maybe this company is gold, copper. I'm just going to have a quick look at the most recent gold. They did release a presentation, but I won't open that up. I'll look at the most recent quarterly activities report. And the reason behind this is sometimes you get pretty good information about what a company's doing. Because it's an activities report. It's activities report. And that's the definition of activities, what you are doing. And as we wait for CommSec to open up this particular report, and again, it's not my computer, it's CommSec. I can go to Market Index and this opens up like that. And it should say what this company does. So drilling results, yeah, looks like gold, copper. I'm assuming this company is just an exploring company, and yep, just exploring company, no production just yet. So this is the sort of company I'd put on I might look at on occasion, particularly if they do release drilling results, but that's about it. Much less likely to own this company for the long term because it's too much of a story. Too much of a story stock. A lot of things can go right or wrong for this company. That's just me and my risk profile right now. So more than likely, I would trade this, if anything, and even then, less likely. Oh, what's the T code? AZY. I did AZY. Oh, sorry. Oh, I know exactly, because I got 4x there. Got to go, oh, there we go. So for me, this is more of a trading stock, if anything. And as TradingView takes its time, again, it's on my computer. Well, this chart was looking spectacular. Noticed the share price really broke out back in September last year. Beautiful breakout, by the way. You can see the increase in volume. Have a look at the increase in volume compared to what we saw, or this company saw, previous to this breakout. So explosion in volume, which is a good sign. A really nice little pullback in October, November. And you can actually see during this pullback, volume decreased. Yay. And then as the share price started to go up again, volume increased again. Exactly what you want to see. Now, we've had another dip in the share price, but unfortunately, we've actually seen an increase in volume. So that's a little bit disturbing. Did they release something negative on the 7th of July? Share price dropped 13.87% on the day on high volume. So 7th of July. Oh, they did a placement. They did a placement raising $40 million. I don't consider that necessarily a bad thing. It's not necessarily a bad thing. In fact, I would potentially even argue that's a good thing. That's a good thing. So now, if you really like this company, you like the management, like the projects, now could be a good time to either add to your position or buy in. And the very fact the share price has pulled back and the share price has sort of found a bit of a support over the last 6 or 7 days, I do like this. I don't mind it. Don't mind this chart. Maybe not for me, but I don't mind it. Thank you for that, Sensei. Stu Percy says, hi, Kneppy, Vection Technologies and AML3D. Any thoughts? Yes, I do have a lot of thoughts about Vection Technologies. I have a sort of a love-hate relationship with this company. They did I think I've told you about the capital raising they did a little bit ago. But I've been impressed with Vection Technologies. They've released quite a few really interesting announcements, like contract wins. Like, for instance, Vection delivers 4.4 million defense order, and they've been, getting all these contract wins quite often. And on top of that, one of the reasons I was really disappointed with the last capital raising, they released the last capital raising on the same day they released their cash flow report. And the cash flow report was really good. I think it was a really bad timing placement. There it is. A Penix 4C at 10:02 a.m. They went into training hold just before and upsized 3.55 million placement. Well, the reason it was upsized is because they did the capital raising, the share price had dropped a lot, had already dropped a lot. So it was a low ball capital raising, if that makes sense. Companies should do capital raisings when the share price has risen a fair bit, when it's overvalued, not when it might be undervalued. That's the worst time to do a capital raising. So I think this was a really badly timed capital raising. And the other reason I was really disappointed in this one was because their Penix 4C was really good. And if they just waited, the share price would have taken off. If they waited, the share price would have taken off. In fact, I was really impressed with this Penix 4C. So $12.5 million receipts, operating cash flow positive, $2.3 million. And if they continue releasing quarters like this, or obtaining quarters like this company looks really, really interesting. The other thing is the sector they're in. So like XR reality, whatever they call it. Okay, but I will note that since then, because of these contract wins, the share price has taken off. There it is. So share price is getting back up to the highs just before they did the capital raising. So they did a capital raising right there when the share price was near its low. I do like the increase in volume we've seen, and if they release another good quarterly, share price could go up further. So you might be saying, well, overall, it's the capital raising is okay. Share price is higher, but it's the extra dilution. If they raised at, say, 4 cents, which it could have been instead of 1.5 cents, it's way less dilution for shareholders. And that's what management should be thinking about as well. So I don't mind Vection Technologies. AML3D is another company that definitely is on my radar, but I just need a little bit more from this company. The main reason I say that is they also release a fair few interesting announcements. But if you go to the most recent Penix 4C, it's still a little bit off from getting to that inflection point. Oh, no. Well, actually, they're not that far away. 2.5 million receipts. They were operating cash flow positive after government grants and tax incentives, but before that, is it before or after? Now, if you don't include government grants and tax incentives, not quite operating cash flow positive, and well away from being free cash flow positive because they spent $706,000 on capital expenditure. So close, not as far as I thought they were away from being cash flow positive, but close, and definitely on my radar. And so let's have a little chart for this one. I have a feeling this chart might look okay now. Share price looked like it was struggling, or the chart looked like it was struggling. I could be wrong. Oh, not really struggle. The share price has really taken off. Okay, so yeah, share price has really taken off in the last month. And what's the market cap of this company now? 165 million. If I actually compared Vection Technologies to AML 3D, I probably prefer Vection Technologies just based off valuation. And the share price of AML 3D has just gone bananas, has doubled in like a month. So always worry about that. You can see what happened last time that happened. Share price went bananas back in July, 1 year ago. And then it took a while for the share price to go on another run. Anyway, so definitely two companies. One company, I think, in fact, I'm going to say both companies on the precipice of breaking out. Particularly, well, actually, no, I'm going to disagree with that. Both companies are very close to hitting that inflection point of becoming profitable and cash flow positive. I think even though Vection Technologies had that really good quarter, I need to see a little bit more. So I need to see a few quarters, and AML 3D is close. So both these companies are getting close to the point where I would say, hey, something's happening here. Something exciting is happening for both these companies. Thank you for that, Stu Percy. Dimetrix, off topic. What are people's thoughts on Palantir in the USA? Can it double and double again? A mate is trying to get me in, and the numbers are amazing. I'm so close. I only have 5% weighted in Nasdaq for the US, so I'm thinking of adding some individual stocks on this, on top of this to get up. How much direct USA is too little, and too much? Some of this depends. Could Palantir double and then double again? Sure, it could. But will it? It could, but will it? That's the question. I haven't had a look at Palantir for a while. I'm pretty sure this is Palantir. I could be mistaken. It is Palantir. Let's have a look at their financial. Actually, we'll have a look at their overview. Okay, so no surprises what we see. The share price has really gone bananas recently. So no surprise in the revenue growth. We're talking about 30% revenue growth over the last 5 years. Earnings per share growth negative. So they could be spending more on marketing, advertising, or research and development, which is why earnings have dropped. So there could be some one-offs in there as well. Gross margins, expect that to be high. Yep, 80%. Operating margins, 30%. But I would expect operating margins to increase over time as this company finds more scale, that sort of thing. Returns on equity and invested capital both negative. So this company, I wouldn't say it is high quality just yet because it doesn't have a long history of profitability. In fact, it may not be profitable. We'll just have a quick look. I expect the revenue to be spectacular. Revenue growth to be spectacular. It is. Income, let's see. Yeah. So they've just become profitable in the last few years. Before that, highly unprofitable. Unprofitable? That's not a word. Highly unprofitable. So they've possibly hit inflection point. The other thing is cash flow. We'll go to cash flow. In fact, we'll go to free cash flow. Yep, and they're free cash flow positive. Although do be aware that a lot of American companies have a lot of stock options or stock issues to shareholder. Forget what they call it. And what they call it here, they have stock-based compensation. That's what it's called. So this company has over, seems like on average, about $500 million of stock-based compensation per year. And I do believe you have to take that away from the cash flow. That's just the way I look at it. Because this is, instead of income or wages, this is on top of that. So it's a real thing because dilution. In fact, if you have a look at, no, it's not here, but anyway. So the company does look like it's growing really good. The company is now profitable and generating cash flow. It looks interesting. P ratio says 670. But that could be justified based off the growth. And the reason I say that, you could see that the profit of this company could triple in the next few years. Now, the chart, I think the share price has just gone bananas the last maybe year. Let's have a look. Palantir. Oh, yes, yes. So really nice breakout. In fact, share price has been in a really nice uptrend since about May 2023 when the share price was 8. Share price has gone from $8 to 153.52. And I'm pretty sure the share price dropped a lot. Yeah, it did drop a lot from 2021 to 2023. And share price has just gone bananas. Have you missed it? Don't know. Have you missed it? I don't know. But the main thing is the company is now profitable. So this could be the start of a long runway of growth for this company in terms of the share price. Now, the other thing is, what's the valuation? Market cap is 362.3 billion. Does seem pretty high. Does seem pretty high. Anyway, so what are people's thoughts on Palantir? Can it double and double again? It could, but I think there's probably less chance it's going to do it now than what it was 1 year ago. But I wouldn't rule it out. A mate is trying to get me in, and the numbers are amazing. Numbers are amazing, but I think you should make your own decision. Why is your mate trying to get you in? That's the other thing. I only have 5% weighting in Nasdaq for the US, so I'm thinking of adding some individual stocks on top of this to get it up. I can't disagree with that. Like I have, what's my weighting in Nasdaq? I probably have a 20-25% weighting in Nasdaq, and I think that's probably okay for me. How much direct USA is too little or too much? I think this is dependent on how you think the world's going to play out over the next 10 years. And I think the best companies in the world are on the Nasdaq, and I think some of these companies have the potential to become significantly bigger than they are now, just because of what's happening with AI. I think AI is going to revolutionize everything we do. Everything we do. AI and automation is going to revolutionize everything we do. And I think those companies are the ones who are going to benefit. We'll all benefit, but anyway. Hopefully I've answered your questions. Would I personally take a position in Palantir right now? No, I don't know. It does look, I don't know, not on the top of my list, put it that way. Tinker 312, superb timing here. So before Mesoblast released their pennies 4C and the share price popped up for 34%, so there's opinion on a Mesoblast. And because of this particular comment, I was going to feature Mesoblast as my chart of the day on Friday, but I then had to choose a different company because Mesoblast released their pennies 4C at 9:58 a.m. and the market loved it. Price seems to have considered and perhaps one good news announcement away to rallying in a similar fashion to EZZ and SKS Technologies. Well, look at that. Great comment from Tika. And perhaps one good news announcement away to rallying. Well, they've done much better than EZZ and SKS, I can tell you that much. So let's have a look at the chart of all these three. We'll start off with the EZZ. Definitely the sentiment in this company is shifting. Went from negative, now back to positive. I'm just going to actually refresh. Sometimes you have to refresh TradingView. And I will get rid of some of these just in case. But it doesn't usually work. In fact, refreshing does much better than getting rid of tabs. You can see refreshing. Anyway, so this is EZZ. Definitely a bit of a shift in sentiment and maybe a shift in the trend as well. Yeah, I'd say this is potentially moving into an uptrend. And SKS Technologies, well, I think we've definitely seen a bit of a shift in sentiment for this one as well. Yeah, this one actually does look better than EZZ. I like this one. I like SKS Technologies, and thankfully I do own. And I was almost going to sell because I thought maybe the uptrend is coming to an end, but now the share price is starting to move up. I probably would prefer some more volume. Now onto Mesoblast. And yeah, this one, yeah, on good news. This one's breaking out on good news. This one looks way better now. So thank you for that, Tinker, because you said it. Yeah, brilliant. Perhaps one good news announcement way to rallying, and now it's rallying in a much better way than EZZ and SKS. Bullwinkle says, TradingView screen and now a target ring icon at the lower right-hand edge of your screen. A target ring icon, lower right edge. Target ring. I have no idea. Target ring. Screeners. Oh. But do I have my old screeners here? So this is screeners. I want some technical screeners. And I don't think I have my old screeners here. I could be wrong. Yeah, I don't have my old screeners here. They got rid of all the screeners I had. Just got rid of them. Just got rid of them. Anyway, so I might explore that later, but thank you for that bullwinkle because I had no idea it was there. So this is good thing. If you have something that might benefit me and our viewers, just leave it in the comment section of this video. Oh, Ben Hutchison. I did not, but Ben Hutchison did a bit of a deep dive on story and fundamentals of SenSen this morning. TLDR. Am I supposed to know what TLDR means? 2T, TLDR. I'm a bit of a fuddy-duddy, maybe. TLDR, too long, didn't read. Too long, didn't read is, I think it's a stock. That's all I got here. That's what Google says. It's too long, didn't read. Which I understand. Anyway, what was I going to say here? Oh, that's right. Show me the incentive and I'll show you the outcome. Was that a Buffettism? I believe that is a Buffettism. Show me, or maybe it's a Mungerism. I'm just going to, what I'm going to do is Google. Charlie Munger, there it is. Charlie Munger says, show me the incentive and I'll show you the outcome. And I think that is true in life. Incentives are very powerful. Anyway, too long didn't read, and you could say the same thing about your comment here. I did start reading it. Some things about SenSen. I think you just mentioned in the comment, where did you say it? I think I'd be looking for a few more quarters of growing cash flow and improving cash balance and especially improving margins. I think I'm on the same boat as you, that I want to see a little bit more from SenSen. And I would also like to see this company sort of not pivot away, but there seems like they've really focused on Canada for some reason because we're talking about Montreal, Toronto, Vancouver, where they've got all these contracts. So I'd probably like to see them sort of expand outside of Canada. But they're moving in the right direction and they are operating cash flow positive, albeit on the low, sort of very low amount. And probably the other thing I'd like to see is a little bit more interest from the market. The reason I say that is if you have a look at the chart, it's highly illiquidly traded and we don't see massive volume. So I'd like to see a little bit more interest in the market coming in and maybe a little bit too volatile for me to be even thinking about trading this one. So a little bit away of SenSen. Oh, Yakitorio Taku. Clever culture systems breaking out. Wish I bought more when it was lower. 1 week ago, I put this company's ticker code on my list of companies whose charts look really interesting. I was thinking, ooh, clever culture. They also released something really interesting about 2 weeks ago in relation to a relationship with Novo Nordisk. There is instrument sale to Novo Nordisk for group evaluation. I also did a video on Novo Nordisk, so that was interesting, unrelated. And then I had a look at the chart last week, and I went, "Ooh, this chart is starting to look interesting." So, and whoa, it looks even more interesting now. So the share price has gone up significantly in the last week. Yeah, it's gone up 58.82% in a week. So this was looking interesting last week. So last week was, yeah, there. So not as interesting as it does now. So this, and look at the volume. The volume has been very good. A week of volume. So what has really led to this breakout in the share price? Because that announcement, oh, that was on Monday. That was on Monday. They released this instrument sale to Novo Nordisk. But if I remember correctly, the share price didn't initially rise. Oh, it did a little bit. Oh, 23.5. I was right. I was wrong. So it was Monday when I became interested in Clever Culture's chart. It wasn't last weekend. It was Monday because I remember the share price popping up. Yeah, now I remember. It's all coming back. And I was thinking, oh, this looks interesting. And the share price kept on going up. One little bit of maybe reason to be a little bit tentative about this is just there is a bit of resistance sort of in this zone. Not a lot, but a little bit. The reason I say that, last time the share price got into this zone, we saw the share price pull back. Now, it's been in this zone now for 3 days. So there's a little resistance, but not a lot. So chart is looking good for Clever Culture and definitely a company I have on my radar. So thank you for that, Yakitori Devshaw had something interesting happen to him, and there was a really good reply from Trader Hooper. So Devshaw says, today my order for one of the stock was twice cancelled by the exchange for no reason. Explanation is your order to buy XYZ has been cancelled. This is due to the following reason. Order purged by exchange. There is no trading halt or anything. Once it was cancelled during midday and second time after market close. Does anyone know why this happens? I had similar incidents in the past as well. Well, this happened to me many, many years ago, and because the company went ex-dividend. Actually, no, it was in suspension. It was either suspension or ex-dividend. And fun enough, Trader Hooper says exactly the same thing. So orders will get cancelled by the ASX if a stock goes ex-dividend. Absolutely right. The first time I saw this, I was like, what's happening here? Oh, it's gone ex-dividend. As well as when a stock is suspended. Yes, in fact, when you see a stock getting suspended, you'll see every order just go away. All the orders just go away. So, yeah. Your broker may also cancel orders if they think it is too far from market. Happened to me. Happens to me, this. Particularly if you're buying in on the opening auction. You put in a bid that's well above the share price, and the broker goes, what are you trying to do? And then I reply, don't you know anything about opening auctions? Stupid broker. I've never said that, by the way. Anyway, too far from the market or has been sitting in the queue for too long. There are probably other reasons, but they are the reasons to come to mind quickly. These are generally after the market closes or pre-market though, not usually during the day. You can always call your broker and ask about your particular situation. That's actually a good point. It's usually pre-market. It's usually pre-market, unless the company is suspended during trading. Other than that, I can't tell you because that's the only two reasons I have seen for myself. Ex-dividend and suspension. But thank you for that reply, Trader Hooper. Anthony Nowland says, worth looking at GRG Engineering. Let's have a look. I have a feeling this chart is going to look pretty good. And I know because I looked at it last week. Yes. This chart looks pretty good. But here's the thing. When it comes to a chart like this, share price has been in uptrend for a while. I tend to put this at the back of the list of potential trades. I'm looking for companies whose charts look like this. There it is, like something like that. So at the sort of right after a breakout, sort of the start of a new potential uptrend. Now, there's more likelihood the share price might not continue in an uptrend and might die away, but that's why I will sell out that position and try to find a new one. So for this one, share price has been in uptrend for 8 to 9 months. It could continue going up, absolutely. So I'm less likely to trade these, however, because I'm looking for new trends, I suppose, new uptrends, breakouts and new uptrends, but still looks pretty good. James Nicolo, CCR and CCV. I think James Nicolo loves C. CCR, CCV, CCTV. Okay, so CCR is Credit Clear. Credit Clear was on my radar within the last year or two. Do they release pennies for Cs? I can't remember. Looks like they don't anymore. I assume they did at one point. Yep. Pennies for C, 29th of July, 2024. And then the ASX says you don't have to issue any more pennies for Cs. Okay. So this chart did look really interesting not that long ago. And does it look interesting anymore? I have a feeling no. Ooh. So chart looked pretty good. for about a year. Yeah, almost a year. Then share price dropped, and I think the low has been reached. I think the low has been reached, maybe at 20 cents. Share price looks like it's starting to turn higher. Now, I might be willing to just wait for their results in August just to see how the company is doing. We're not seeing very big volume, but the main reason we're not seeing big volume yet the share price is rising is no one's wanting to sell. So no one's wanting to sell, so there's no pressure on the share price. And the only pressure on the share price is people wanting to buy some shares. So share price pops up because they're buying on market. Those who want to sell are putting limit orders in, and that's how you get the share price to rise. So there is a difference between limit orders and buying on market, and the enthusiasm of the sellers and buyers determines which way the share price is going to go. If you're really enthusiastic and you want to sell or buy, you're more than likely going to buy and sell on market, and that will shed the share price up or down. If you're willing to be patient, you just put a limit order in and wait for it to get hits. This is what I did the other day. I just put a few limit orders in and just waited to see if they got hit. And eventually they did. That's me being just a little bit patient. No, I think I've still got one order in. Okay, so that's CCR. CCV, this is cash converters. I'll be honest with you, I don't really look at cash converters all that often. So I just look at the chart for this one. Oh, hello, chart. Cash converters chart looks pretty good. Now, if we have a look at the weekly chart, oh, even the weekly chart looks really good. Am I doing a bit of a disservice not looking at this chart more often, because this weekly chart looks pretty good. The daily chart looks pretty good. If you had to complain about anything, well, I was going to say volume, but we've seen some big spikes in volume in this uptrend. So I can't remember any news flow from this company. Well, there you go. Nothing in the last month. The last time they released anything was something to do with Lloyd's funding and acquisition of UK franchises stores. They had released a presentation on 13th of May. This chart, I'm going to write this down. CCV. Thank you, whoever sent me this comment, James Nicolai, because sometimes you give me inspiration. Not only you, but all the other posters as well. Just Jim Kramer says, for the video bank, do you hate your life? Do you love catching a falling knife? 5-year chart. Are airline stocks a little too lovey-dovey? Well, I'm going to answer these questions in this particular video. Do you hate your life? No. Not sure why you asked that. Are you hinting at something? I have no idea. Do you love catching a falling knife? I'm trying to get away from it. I do actually, on occasion, I do like when a share price of a company drops a lot and I go, oh, the market's overreacting. I think the share price is, or the company is really attractive. I am actually trying to get away from that because it's a little bit more stressful and it can be quite hit and miss. And I'm trying to get away from it, but I still, like the other day, Botanix share price dropped a lot. I went, rubbing my hands going, oh, I think the market is overreacting, but their share price went up a little bit. I went, oh, maybe I should take profits. So this is one thing I want to do less and less. I catch a falling knife because, again, share price is going down. There is pressure on the share price. Just wait to see what happens to the share price. Are airline stocks too lovey-dovey? I hate airline stocks. I definitely only trade airline stocks. They're not for me for the long term. Airlines are horrible businesses. I'll say that as well. That's just me. And Zimplats, P ratio 0.8, yield 36.9%, return equity 82.7%. And the chart was looking good. Zimplats, so this is Zimbabwean mining company. Chart was looking pretty good. One of the reasons I do know about Zimplats is because palladium. They do mine palladium, but they also mine other stuff as well. I won't say what. I was thinking platinum and that sort of thing, but this chart looks pretty good. And then palladium chart looks really good as well. Palladium, look at that palladium chart. Potential breakout for palladium. But anyway, do you hate your life? Definitely not. Jack Chard Frontier Digital Ventures chart looking strong again. Let's have a look at Frontier Digital Ventures. I used to own this, and I was going to own it for the long term, and then I just didn't like it company anymore. And then I'm thinking now it's more of a trading stock, And I did put this purple box in, and it's broken above that purple box. So potential breakout for Frontier Digital Ventures. The best thing this company can do right now is to release a really good Appendix 4C. If they still have to release them, I'm not sure if they do. Let's have a look. Did they release one last quarter? I have a feeling they didn't. Yeah, they don't. They don't release Appendix 4Cs anymore. They did release a trading update, so hopefully we get a trading update from the company again in a few weeks. When was their last Appendix 4C? Did they ever release Appendix 4Cs? I'm pretty sure they did, but I could be wrong. There it is, yeah, 31st of July 2023. October 2023, January 2024. And that's it. Oh, there it is. Relief from quarter reporting on the 29th of February 2024. Okay, so chart looks pretty good. Looks okay. But be aware. So we saw the share price rally back in October. Look at that 3-day rally. And that looked promising, but it fell away fairly quickly. So will it happen again like that? Okay. Mr. Vet Pow says Mesoblast launches their first product about the same time Botanix does. Both companies manage about 20 million Australian dollars in sales first full quarter. Mesoblast up 30%, 3.16 billion market cap. Botanix down 50%, 300 market cap. There was a nice little reply from Medical Investor. That's a very basic view. Mesoblast has a huge pipeline, which are mostly in phase 3 trials and on the verge of being self-sustaining without the need of capital raising. The sales this quarter of 30 million was without having all hospitals onboarded and will continue to grow quickly. That's all true. And then Mr. Vetpal says Mesoblast did capital raising several times over the last 10 years and having a pipeline of products which require approval means most likely they will need to raise capital again. Okay, so the most important thing when it comes to these sort of announcements isn't the numbers. So in fact, I did think about this. I went, Botanix and Mesoblast, their sales were fairly similar, but you saw a completely different reaction. Why is that? Because the expectations. It's all about the expectations. So Mesoblast performance was actually a beat on expectations, but Botanix performance was actually a miss. So they fell short of expectations. And that is the reason why. But in saying that, I do think there was an overreaction when it comes to Botanix. Even though I'm nervous about that little trade, I do think there's a potential overreaction. Mesoblast does have a lot in the pipeline. In fact, one of the reasons I bought Mesoblast was because of that pipeline, and they could be self-sustaining. So even though they have done capital raisings and they have all these new products, there's a chance they won't have to do any more capital raisings because they can be self-sustaining. And that's amazing when a company gets to that point. But I do sort of agree that Botanix share price down a lot could be an overreaction, but it could be. It could be. So thank you for that, Mr. Vet Pow and Medical Investor. It's always good to have different opinions. TD Bandera says, long-time subscriber, love your work. Thank you. You are the role model and our investing guru. I wouldn't call myself a guru, but whatever. Please do video on your latest holdings in ASX and performance returns, as well as your top 20 multi-baggers stocks for the rest of 2025. Okay, first of all, I have done a video on my top 20 holdings, which I will release at the start of September. It is a banked video, so look out for that. In fact, my top 20 holdings won't change all that much from now until then. Performance returns, I didn't do that. In fact, I used to have ShareSite, but I'm doing ShareSite again this year. But I sort of got away from doing ShareSite. So I could not tell you my overall performance returns in the last year. It was fairly good, I would assume. But that's something I'm actually not monitoring all that closely right now. As well as your top 20 multi-bagger stocks for the rest of 2025. There is no way I am going to do that. No way. I could tell you 20 companies and I have no idea. It's too short of a time frame. Too short of a time frame. I think you're just really guessing. You're just guessing, to be honest with you. So there's no way I will ever do a video where I try to pick 20 multi-baggers for the rest of the year, because we're only talking about 6 months or 5 months, and anything can happen in that 5-month period. Just Jim Cramer, final comment of the day. I am mentally stressed this week due to underperformance. Advice. No, I can't give advice. It's illegal for me to give advice. Oh, that's a financial advice. Sorry, I can give any other sort of advice. I could tell you about cryptocurrency. You should buy and sell Doge or something like that. That's okay, apparently. I could give advice in property. You should buy some property in Wilcannia. I think that's the next growth market. Buy some property in Wilcannia. That's okay. But give a little bit of advice on a stock? Nah, can't do that. Ridiculous. Anyway, I am mentally stressed this week due to underperformance. I think, I can't relate to this. I can't relate to being stressed due to underperformance. Maybe it's because if I have a bad week, I think next week probably be better. If I have a few bad weeks, I know around the corner it's going to turn. So maybe that's because I have a plan, and if I follow my plan, then if I have a few bad days, bad weeks, more than likely, if I follow my plan, everything will turn positive, and then I will overperform. So maybe just having plans and sticking to your plans is relieve stress. Another thing is I don't get that stressed, I'll be honest. And if I find myself getting stressed, which doesn't happen all that often, I can't even remember the last time I got stressed. In fact, I do remember I was drinking too much Pepsi Max. So I thought I want to get rid of that drinking too much. And because I really decreased the amount of Pepsi Max, I didn't realize how much caffeine was in Pepsi Max. My body was under stress. I was getting headaches and all that sort of thing. So I just took tablets. That's it. And then a few days later, everything was good. Mentally stressed, yeah. I can't give you any good advice with this one, unfortunately, just Jim Cramer. I think everyone reacts differently to stress. Maybe understanding why you underperformed, why, and if you can answer why, that could relieve the stress. Did you go against your plans? And again, I think it's only a week. It's a very short time period, and anything can happen in a week. You could have the best week next week. And maybe you're focusing on your underperformance in the last week. Have you underperformed every week? Or did you significantly overperform in the previous few weeks? So I think you have to look at the overall picture. Is everything going right? Do you have plans? Is everything going to plan? That sort of thing. So that's all I can really say. Okay, that's all I have for this video. If you have any questions, any thoughts, leave those in the comment section of this video. Otherwise, I'm not a financial advisor. If you need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.